Hi everyone, this is Rob Roy and welcome to the Elliott Wave Elite U.S. Market Update. We take a look at the chart of the U.S. market, the S&P 500. Obviously you can see the wave 3 continues, but notice that as we move further up in the wave 3, the trend is continuing to consolidate. In fact, if we connect these highs and lows, you can see that we have a well-formed pennant pattern. Now, a pennant pattern is not as telling, in my opinion, as a Elliott wave corrective triangle. However, many people regard pennant patterns to be consolidation patterns, and in fact they are. I just don't think they carry quite as much weight as the triangles, but certainly it's when you see a pattern that's that pronounced, you have to pay attention to it, and it means that something is about to happen in the market, and break out to the upside or the downside. The rules are still the same as they would be with a triangle or a flag pattern, other consolidation patterns, and a significant breakout could just simply bring us down to the wave 4 target area on the Elliott wave 5-wave pattern. So in my opinion, that would be a significant corrective move, and certainly one that would fall into play with the consolidating pennant pattern that is occurring. Let's take a look at the SPY to take a look at volume, and as you can see on that way down, we talked about last week how we did have a little bit of increasing volume, and now on this past week as we bounce back up, the volume came down a little bit. Now that could be some institutions lightening up on positions. We're not the only ones that can see this consolidation that's occurring in the market, and just like institutions tend to start accumulating shares before the stock makes a big move to the upside, they also start to lighten up on positions before people really notice the heavier volume selling. So even though the selling was a little bit heavier, it still wasn't even above average. So just something to think about and pay attention to. If we look at the VIX, we can see that we are right back down at that level of 12, so we're at the support area. We'll see how that plays out at the beginning of the week. If we bounce from here or at some point break below that and move back into that trading range between 8 and 12. But at this point in time, we're just sitting on the support level. Remember, we had this large descending triangle, so kind of makes you think that you ought to be on guard for some sort of a significant move to the downside potential. Remember, you don't pick a direction when you have these consolidation patterns. Just saying that when you start to put everything into place, it warrants prudence on protecting yourself to the downside. Looking at the Elliott wave pattern matches with the consolidating ABC patterns within that descending triangle. If we were to get a big break to the upside out of these or out of this triangle on the volatility, that would certainly coincide with a downward move in the market in general. So we'll have to see how that plays out. But it's going to be interesting next couple of weeks. The market's always interesting, and I'm always saying that. But and just as a technical trader, you're always fascinated. You're always learning, and it's always interesting to see how the market moves with what's forecast, especially when you have an indicator as accurate as Elliott wave. What could cause this market to break to the downside or the volatility to break up? You hear all the tariff talks on Friday. Trump was out talking about more tariffs on China. I don't think the market itself thinks that we really are going to have these extensive tariffs in place for a long period of time, that it's more just leverage and bargaining power. But who knows? Maybe that could be something that causes things to move back to the upside in the VIX. But we look at the dollar, and the dollar is not in sync with the interest rates again. Remember, we've been talking about how they've been out of sync and then back in line, and now they're out again because we have the dollar moving to the downside. Maybe we do go down and test that previous wave 4 right now. Eventually we will, because you know how the Elliott wave rules work. But does that happen now or not? The reason I say that is look at interest rates. Interest rates are going straight up, and on Friday closed above 3% on the 10-year, again for the first time since back in May. So interest rates going up. Why isn't the dollar going back up with it? Good question, and don't really know the answer to that question. Look at this trading range that interest rates are in right now. And we like, as you know, to do the butterflies in a directional nature, where you place them out of the money and you have a very low risk position where you can generate a very high potential return. The traditional way of doing butterflies, or the way that I guess you could say they were designed, is for sideways moves, and this would be an example of that, where you would have potentially the top part of the butterfly up here, and then the bottom part down here, and you've got a nice trading range where you jump back and forth within. My issue with that is, how long can you count on these sideways flat patterns to last? We've got two of them back to back here. Do you go for a third one? Does it break out? Nobody knows, and that's the challenge with having the sideways butterflies, is how long does the sideways consolidation pattern last. So far this one's lasted a few months, and had you put the trade back on, or put the trade on in the past, you could have done very well. Just not one of my favorite trades to do. Looking at case studies, CLR did, as we talked about, make the big downside break. We had a little bit of a bounce. We talked about the fact that that could happen because the move down had been so vertical. Pardon me. And now we're going through a little bit of a consolidation. We'll see how the beginning of the week fares on this with the symmetrical triangle that we had. As a reminder, for pardon me, or for those of you that are new, we had the doji back here in August, and then the false breakout to the upside, and then the big move lower. The case study that we added last week on MMS has continued to move to the upside. Look at that nice move on Friday as it stays within its LA wave pattern. It did create the wave 4 in the midweek when we had a move to the downside, but no, where it closed. It closed right back up in the pattern, so this one continues to march to the upside, even with we having a little bit of a weak tape in the market. But so far, this pattern looks really, really good. Remember, we weren't able to do butterflies on this, so it's prudent to keep a close eye on this. But that move on Friday was very, very nice, as this one continues to march towards its wave 5 high target. Wanted to add a new case study, and there's actually two of them that showed up on my search that I wanted to show you. We have F5 networks. Now, this one you'd have to be careful with, because you can see we're almost to the wave 5 target. So do we get an extended wave 5, or does it stop, right here? You've got a little bit more. You got about a 5-point move, but look at the money flow that's coming into this. Lots of cash has been moving into this position. So, pardon me, or into these shares. So we could very well break through that wave 5 and have an extended wave 5 target out of this pattern. I wanted to show you that one just to see how this plays out, again, with all that money coming into it. But it looks like we'll get 5 points, and we'll see what happens from there. And then in a different LA wave pattern, we have MasterCard that is in a very strong wave 3 moving to the upside, and it looks like that one could continue on for a while as well. So a couple really good patterns to take a look at for you to follow along with, and we'll see how those move in the future as well. I hope you've had a wonderful week, and we'll be back to talk to you again next week. Take care, everybody.